Assalamu alaikum warahmatullah, dear students at Faculty of Commerce English section. Today we will have section 3 for our interesting topic, Principles of Macroeconomics, under supervision of Prof. Dr. Yasser Ibrahim and prepared by Hamad Mungit. So, in last two sections, we had a quick revisions about lecture 1 and lecture 2, and today we will have a multiple questions including MCQs and true and false questions. So, question 1, a nation's gross domestic product, and we have to focus on every answer. A is the dollar value of the total output produced within the borders of the nation. B is the dollar value of the total output produced by its citizens, regardless of where they are living. C can be found by the formula C plus IN plus S plus XN. D is always some amount less than its C plus IG plus J plus XN. So the gross domestic product is always the total output produced within a country or within the borders of the nation, regardless of the citizenship of the factor of production. So the right answer here is A. So GDP is the dollar value of the total output produced within the borders of the nation. It couldn't be B because B is close to gross national product, and we have to subtract the factors or the foreign factors who are producing within the country. C, here he calculates the net investment, and we always have the gross investment on the GDP. When we calculate the GDP or the process of calculating GDP, we must include the gross investment, not net investment. Second question is net exports are. This is an easy one. The portion of the consumption and investment goods sent to other countries, or exports plus imports, or exports less imports, or imports less exports. The right answer here is exports minus imports. We have always the net exports. It's calculated in the formula X minus M. So net exports are exports less imports. Gross investment refers to, and we had in the sections face to face, we have the meaning of gross, and we said the gross meaning is including depreciation. So if we have gross investment, that we have include investment, include depreciation on it. If we have gross domestic product, we have the depreciation. If we have the gross national product, we also had the depreciation. A is private investment minus public investment. B, net investment plus replacement investment. C, net investment after it has been inflated for changes in the price level. D, net investment plus net exports. The right answer in gross investment, it's the net investment plus replacement investment. And replacement investment, we mean by replacement investment here الاستثمار الإحلالي, which is also the depreciation. So if we had some assets that is depreciated, لو عندنا عنصر وعندنا أصل تم إهلاكه نقوم استثمار إحلالي replacement investment. In calculating GDP, governmental transfer payments such as social security or unemployment compensation are so when we calculate the GDP we had governmental transfer payments المدفوعات الحكومية التحويلية كالسوشيال سيكيورتي or unemployment compensation تعويضات البطالة أو التأمين الاجتماعي. بس لما بنيجي نحسب الجي دي بي يا شباب ما نقدرش إن إحنا نحط ال governmental transfer payments in the GDP. Why? Because it's a transfer payments. We can't include it in the gross domestic product. We can include the government transfer payments أو المدفوعات التحويلية فقط لو قمنا بشراء سلع وخدمات. If we buy goods and services with the social security or with the unemployment compensation, then we can include it in the GDP. But in general, we can't include governmental transfer payments in calculating GDP. A, not counted. B, counted as investment spending. C, counted as government spending. D, counted as consumption spending. And we agree that governmental transfer payments can be counted in the gross domestic product, so it's not counted. We can't count it as a government spending because it's not spending on goods and services. So the right answer is A. Suppose that inventories were 40 billion in 2003 and 50 billion in 2004. As we see here, the inventories have increased from 40 billion to 50 billion. Accountants would add 10 billion to other elements of investment in calculating total investment, or subtract 10 billion from other elements of investment in calculating total investment. C. Add 45 billion, 90 divided by 2 to other elements, calculating the total investment, or subtract 45 billion, 90 or divided by 2 from other elements of investment in calculating total investment. So the right answer here, we add the 10 billion to other elements of investment when we calculate the total investment, because investment has a definition, it's increasing in inventories. So when we have from 40 to 50, we have a 10 billion increase in inventory. So we have a 10 billion increase in investment. Question 6. GDP differs from NDB. We have a definition and we have a formula on that. When we calculate the GDP or the NDB. And we mean by GDP is gross domestic product, while NDB is net domestic product. The formula is GDP or GNB equals NDB equals GDP minus depreciation. So when we want to calculate net domestic product, we have the gross domestic product minus depreciation. So it's easy in calculation. Net domestic product equal gross domestic product minus depreciation. Back to our question. So GDP differs from NDP, and GDP is based on gross exports, while NDP is based on net exports. Not right. B. GDP includes, but NDP excludes indirect business taxes. Net investment is used in calculating GDP, and the gross investment is used in calculating NDP. Gross investment is used in calculating GDP, and net investment is used in calculating NDP. So the right answer, every gross, we had a gross. So here, gross investment is used in calculating gross domestic product. Net investment is used in calculating net domestic product. So when we calculate the gross domestic product, we say that C plus I, and by I here, we mean gross investment. While in net domestic product, we exclude depreciation, and we exclude depreciation from gross investment. So we use net investment and net domestic product in order to calculate the net domestic product. 7. By summing the values added at each stage in the production of some good, we obtain, and we have three approaches in calculating gross domestic product. The first approach is calculate GDP by expenditure approach. Second approach was by income. Third approach was by value added or the production approach. So we obtain the price of that good, or the total income generated by that goods production, the total cost including profit of that product, all of the above. When we sum the values added at each stage in the production of some good, we can calculate the price of that good. So we can get the price of that good, or the total income generated by that goods production, or the total cost including profit of that product. We can have all of the above if we sum the value added at each stage. So correct answer is D. Question 8. Transfer payments are included in A. In net income, national income, or personal income, or gross domestic product, or net domestic product. Transfer payments, we can include it in the personal income because that person use these transfer payments as an income, as a purchasing power. He can buy goods and services in another stage. The amount of after-tax income received by household is measured by we here can calculate the amount of after-tax income received by household is measured by A. Discretionary income, B. National income, disposable income, or personal income. When we exclude tax from the income received by household, we can get the disposable income. الدخل المتاح. الدخل المتاح للإنفاق هو عبارة عن الدخل or personal income minus tax. عشان كده ال disposable income أغلب الحالات بيكون أكبر من ال personal income. Gross investment is A. Flow as is depreciation. B. Flow as is capital. C. Stock where is depreciation is a flow. D. Stock where is a capital is a flow. We had also the gross investment is always a flow. So investment is a flow تدفق. بينما الكابيتال is a stock. Gross investment is a flow because we have depreciation or as is depreciation. So gross investment is a flow as is depreciation. While capital is a stock. Capital is a flow, whereas gross investment and depreciation are stocks, or flow as our gross investment and depreciation, or stock as our gross investment and depreciation, or stock whereas gross investment and depreciation are flow. Capital is a stock. So a capital here is a stock, while a gross investment and depreciation are flow. So we must know the difference between the meaning of a stock and a flow. Investment or depreciation is a flow, while capital is a stock. Use the following to answer questions from 12 to 13. So here we have data about government purchase, consumption, gross investment, consumption of fixed capital, exports, and imports. While using these data, we can obtain a lot of things, but here we want to calculate the GDP, the gross domestic product. So gross domestic product is equal to a simple formula, GDP by expenditure approach equals to consumption plus investment plus government spending plus net exports. So having a minute to obtain the components of GDP, GDP equals C, consumption, that is 90, and investment, that is 20. We had government purchase, 15, net exports, is exports minus imports. So we had consumption, 90 plus 20 plus government purchase 15 plus 12 minus plus 8 exports minus 12 imports. 90 و20 110 و15 125 زائد 8 ناقص 4 يعني في نهاية الأمر 121. بكل بساطة نقدر نحن نحسب الجروس دوميستيك برودكت A 116 B 121 C 125 D 150 and the right answer here is B 181. While when we calculate the net domestic product, we use another component. Back to the data, consumption of fixed capital. Consumption of fixed capital is another meaning of depreciation. So if we had some capital that is consumed, we exclude it from the gross domestic product and we had the net domestic product. So if you have 121 minus 5, that will equal to 116. Refer to the above data. Net exports is an easy one and we can obtain it from the gross domestic product. It was equals to 8 minus 12, which will equals to -4. When we have the net exports by negative, that means we had a gap. But when we have the -4, that means that we have a negative gap that is called to deficit. While if it was a positive, we'll had a surplus. If the net exports was 0, that will called break even. So we have three cases. If the net exports was negative, that means it called deficit. If it was positive, that means it's called surplus. If it's 0, that means it called break even. Another numerical example. Answer these questions based on the next data. So we had a data of the components, and we have to write or read all of the components of our data. Personal consumption expenditure equals 400 billion. Government purchase equals 182. Gross private domestic investment equals 88. Net exports equals 7. Net foreign factor income equals to 0. Consumption of fixed capital 43. Indirect business taxes 50. Compensation of employees 369. Rents equals to 12. Interest equals to 15. Properties income 52. Corporate income taxes 36. Dividends 24. And distributed corporate profits 22. The gross domestic product for the above economy is. So when we calculate the GDP, we can use the same formula for the consumption or expenditure approach. Is GDP equals consumption expenditure plus investment expenditure plus government expenditure plus net exports. So back to our data, we can use, we will use the 400 plus 128, the government purchase, plus the gross private domestic investment, 88, plus the net exports. And notice that net exports is positive, not negative. That means that we have exports larger than imports. That means we have a surplus. So when we calculate by this formula, the right answer will be D, 623 billion. Second, we need to calculate the net domestic product. And in order to calculate the net domestic product, and we have the GDP 623, we will have GDP or gross domestic product minus the consumption of fixed capital. يبقى 623 ناقص ال 43 يدينا 580 اللي هو النت domestic product. You need to focus by formulas and how to conduct, how to obtain each element. Question 17, refer to the above data. The national income is, and the national income is obtained by the gross domestic product minus, we need here the gross national product gross domestic product minus the net foreign factor income earned in the US minus 93 يبقى 623 ناقص ال 93 we obtain a 530 as a gross national product. So here we have the gross national product. The gross national product is the gross domestic product minus the net foreign income. Question 18. Real GDP refers to, so we have two meanings. We had nominal GDP, we had the real GDP. So real GDP refers to the value of the domestic output after adjustments have been made for environmental pollutions and changes in the distribution of income, or GDP data that embody changes in the price level but not change in physical output. C. GDP data that reflect changes in both physical output and the price level. Or D. GDP data that have been adjusted for the changes in the price level. The right answer is D. Real GDP is the nominal GDP but it's adjusted for the changes in the price level. لازم إن إحنا بنعمل له تغييرات بالأسعار and we used constant prices الأسعار الثابتة بنستخدمها في الريال جي دي بي وبنستخدم حاجة اسمها البيز يير أو سنة الأساس. Question 19. Nominal GDP is adjusted for price changes through the use of nominal GDP. نقدر إن إحنا نعمل له adjusting للprice level باستخدام حاجة اسمها ال GDP deflator or GDP price index. So we don't use the CPI consumer price index, which we will have in next sections, or the PPI, the producer price index, or exchange rate. We had used the gross domestic product price index or the GDP deflator. Question 20. Price index is a comparison of the price of a market basket from a fixed point of reference, or a comparison of real GDP in one period relative to another, or the cost of market basket of goods and services in a base period divided by the cost of the same market basket in another period, or a ratio of real GDP to nominal GDP. The right answer is comparison of the price of a market basket from a fixed point of reference. So that is the price index or consumer price index, which we will have in next sections. The second part of our section is true or false questions. Question number 1. In determining GDP by expenditure method, it's appropriate to use net investment rather than gross investment as a measure of investment spending. زي ما احنا اتفقنا أي gross measure we use gross components. So here we have gross domestic product. We should use gross investment, not the net investment. امتى نستخدم النت investment? We will calculate the net domestic product. Question 2. The simplest way to calculate GDP is to sum the total sales of all business firms. هل الإجابة دي صحيحة؟ لا، لازم نركز. أسهل طريقة عشان حساب الجي دي بي إن أنا أجمع ال total sales of all businesses. لا، ما أنا هقابل حاجة اسمها intermediate goods. We can calculate the intermediate goods. So we have to avoid double counting. So answer is false. Question 3. If real GDP is 50 and nominal GDP is 100, the GDP price index is 200. By right formula, GDP price index is equals to nominal GDP divided by real GDP multiply 100. So nominal اللي هو 100 على 50 في 100 هيدينا طبعا 200، وده طبعا الجي دي بي برايس اندكس او جي دي بي ديفليتور. Gross private investment exceeds depreciation in an economy that experiences expanding production capacity. طبعا أنا عندي هنا ال gross domestic product أو gross private investment بيكون أكتر من ال depreciation لما ال economy ده بيختبر expanding production capacity، زيادة في الإمكانيات الإنتاجية، وده دليل إن أنا عندي صافي بالبوزيتيف، يبقى الأنسر هنا is true. Fifth question: personal income usually exceeds disposable income. So answer here is false. Personal income is always exceeding disposable income. فالدخل الشخصي لازم دايما يكون أعلى من الدخل المتاح. ليه؟ عشان إن الدخل المتاح ده عبارة عن الدخل الشخصي minus التاكسز. ده كان سيكشن النهاردة. شكرا جدا لوقتكم وبالتوفيق إن شاء الله.